Hello, everybody. This is Rob Stiles with Revolution Realty Team. Got Sam Parker here with mycreditguide.com. Just chatting about some different credit card ratios and those kinds of things to help increase your points or keep them from falling prior to making purchases of anything that requires getting financing. So thanks for joining us today, Sam. We really appreciate it. It's always great to have an expert around to learn a few things.
Yeah, absolutely. Thanks for having me. And it's a great topic that you pick because credit cards can be one of the things that either really helps people a lot or really hurts them. When I'm going through somebody's credit report, one of the first things I look at is what we call their balance to limit ratio. And that's exactly what it sounds like. You got to take, do the math. And if you have, say a $500 credit card and you're using $250 of that credit card, you're at a 50% balance to limit ratio. And people just don't understand the impact that has on their credit scores. So, just some general kind of thresholds that we tell people to pay attention to. First of all, anything over 50% of the balance to limit ratio, you run a great risk depending on how old the credit card is because length of credit history factors in too. But there's a great chance that once you cross over that 50% balance to limit ratio on that credit card, that account can basically hurt you more than it's helping you. Because the way that the credit scoring algorithm looks at it is that you're overextended, that you don't have enough cash or liquidity to pay for something, and so you're having to dip into your lines of credit. And so once you cross over 50%, you run a big risk of it hurting you more than it's helping you. Now, the cool thing with credit cards
quick
is
question,
that once you
Sam. Real quick
ahead.
question. So I've also heard tapping into that same situation. Like, what about raising your credit limit if you have the opportunity? Does that help or hurt, or is it a whole different thing?
No, that helps. That helps because anything that you can do to pad that number on the high side of the limit when you're comparing it to the balance is going to help you. I will tell you that in recent years, it's gotten harder and harder you used to be able just to call up and say, hey, raise my limit. And it was a 5-minute phone call. And regardless of where you were at, they were like, yeah, absolutely. They raised it up. It's not that easy anymore. You usually have to be showing good balance to limit ratio or credit utilization already, and also showing them on your other credit cards to get those increases. But yeah, that would help. If you can get a limit increase, then that's just going to pad those stats. And so all of a sudden, like say that, again, that example of a $500 credit card at a balance, and then you have a $250 balance on it, you're at 50% right now. If I call my credit card company and get that increase to $1,000, now I just drop down to 25% usage on that card, and I'm going to see a big score bump because I went under 50%. And then the other threshold that we really tell clients to dig hard for is to get their usage under 30%. And then the ideal range, and it's kind of weird numbers now, but it's going to be in that like 6 to 8% range as well, just to get them down there to show that, you're just using them as a credit building tool, kind of paying for a tank of gas and paying it off. But you definitely don't want to have maxed out credit cards or even, over 50%, or you're going to really see a drop in your credit scores.
Wow, that's really good information. So then along with that, so say hypothetically, I've got a card that has, like you said, $500 on it. Maybe my limit's $1,000 and I go up to $1,500. So obviously my credit utilization changes. But how long does it take? Do I get points increased the moment that they actually make that change, or how does that work?
Yeah. It's usually going to be on the next reporting cycle. Sometimes it'll take 2 reporting cycles. And that reporting cycle, when credit updates, is normally that first week of the next month. So it just depends on when you did it. Like, let's say that you did it, that you got that increase at the beginning of the month. Then the following month, it probably will be on that credit report. If you got it at the end of the month, it's going to need a full 30 days, most likely, to update and to then give you credit for it. But within 30 to 60 days, you should see that benefit of that credit card. One thing I will tell you, too, that a lot of people don't realize is that when it comes to balance limit utilization, you get scored in 2 different ways. So you get scored on your individual balance limit ratio. Like, let's say you have a city card, right? So they're going to look at your city card and how are you using it? Are you over 50% or whatever? You're going to get scored on that individually. Then they're going to compile all your credit cards and they're going to add up all your limits and all your balances. So let's say that you had, 4 different credit cards, and one of them's $2,000 and the rest of them are $500. So you have a total of $3,500 in credit. They're also going to look at your overall balance to limit ratios. They're going to add all your balances and all your limits up and then look at those. So not only are you getting scored on your individuals, but also your balances. So the point of me telling you that is that if you come into some money or you're going to be paying credit cards down, you get more bang for your buck instead of like in my example where you have one $2,000 credit card and then three $500 credit cards. Like let's say that you came into $1,500 and you were going to pay, your first instinct is I'm going to pay the big credit card down. You would actually get more points out of paying the three little ones down and leaving the other one, close to the max, because you're going to be affecting that overall balance to limit ratio no matter what when you pay $1,500 down. And then we're affecting three individual cards by paying the $500 cards down as opposed to taking on that big one. So keep that in mind too, that you're scored on your overall balance to limit ratios as well as your individuals. So anything that you do, try to impact both sets of criteria when you do that.
That is awesome. I mean, I think a lot of people have an idea about this stuff, but for some reason it just feels kind of, cryptic in a way. Like it's just, is there a secret there? What's the formula? And it sounds like, it's not necessarily that all of these things are like really, really difficult, but it's just, knowledge is the battle. Like, knowing is half the battle, I guess. So, again, that's why, Sam is awesome, and we're happy that he's taken a minute to help educate everybody. But, Sam, thanks, for another, chat and just helping us all understand. I mean, just bettering ourselves individually, and that's what it's about, just one step at a time. So, again, Sam is at he's mycreditguy.com, or Sam at mycreditguy.com for email. So, Sam, you have any last words that you'd like to shout out?
Yeah, just to let everybody know, we do have a video library that covers a lot of these topics too. So if you go to the mycreditguy.com and you look under blogs, you're going to see videos that kind of try to, all it is education there. We're just trying to get everybody up to speed. So whether you come, I would suggest anybody watching this, if you want to get in touch with us, touch base with Rob, touch base with myself, and let's get you set up for a free review. So we'll look at the credit and tell you exactly what needs to happen and how you can either achieve it on your own, or if you decide that you need some help, then we'll come up with a game plan for you. So thanks a lot, Rob.
Yeah, man, of course. Thanks for spending a moment with us. Really appreciate it, man. Have a good day.
Anytime.